All right, good morning, good afternoon, everyone. Trendy John here from Simpler Trading. We are going to get started with our broad market analysis, also known as the BMA. As you guys all know, I'm just coming back from my trip from Vegas. It was an absolute hit, had so much fun. I am guaranteed to know that I just made some memories with my 21-year-old that will always be something special for her. And it was 2.5 days of just absolute awesomeness. If one thing I would recommend is that if any of you are going to Vegas, we were just shocked and amazed by this show that we had booked that my 25-year-old said, "Hey, let's check this out and see, what it's all about." And it was called Absinthe, and it was up close and personal. It's in a tent that's right outside of, or right on the backside of Hell's Kitchen by the Bellagio. Um, just so many different performances in there. I will say, disclaimer, it's a little crude because, like, the main guy who comes out before introducing the different dances, acts, and so forth, he's a comedian. And they say some pretty crude stuff, so be ready. But I promise, if you can get past that, it's just so cool. And I hope you guys are in Vegas at some point and tell me how you liked the show. It really, really was awesome. Coming back, I'm excited. I was taking a look at the charts. We did really awesome last week on Tesla. And so I was coming off of the last couple weeks thinking the market was a little bit difficult, a little bit more difficult than the year, I would say. And the reason why I say that is because there was a lot of choppiness, right? And we all know that being in chop is it's really easy to speculate and find yourself at, you can be right, but the timing is a huge variable in chop. So you really need to be precise with your entries. Now, saying that, the trading, the intraday trading has been great. Loving it, loving the SPX that we're throwing out there. But my point is Tesla, right? It just came back and absolutely, I think, blew a lot of people's socks off. And I'll show you that chart at the end of this broad market analysis. So I don't usually cover stocks, but we're going to cover Tesla at the end of this. And I want to make sure that you guys know what to kind of prep for and be ready for going into this week with Tesla. All right, so let's start like we always do. We're going to go over to this week's U.S. economic calendar. And as a reminder, everybody, the U.S. economic calendar is something that we use to understand what is going to happen, right? These are catalysts that push price to supply and demand. And before we move on, don't forget to hit the like button and go ahead and share with your friends and family. I do believe that we have the best process out there. When I talk about catalysts, we want to think like the bigger money, like institutions. We are lining ourselves up with bigger money, and that is the advantage that we have over all other strategies is we don't sit on our hands. We don't wait until prices already moved to figure out if we want to be in the trade. We are aligning ourselves with the bigger money. But it's not as easy as it looks. You have to think differently. You have to think differently when trading supply and demand. The idea is we are finding levels where we want to get long, and we are finding areas where we either want to take those trims and pull those stops up, or we can also choose to go sell from these areas that we call supply. And you will find that on my charts, we have red and green boxes, right? Supply zone is where I expect sellers to come in. And down here in the green zone is where I expect demand. This is where we expect buyers to show up. So we are identifying these levels, okay? And then we align our trades up to them, whether it's futures, options, or equity. So that's the advantage here in the trendy trading room at Simpler Trading. We are identifying levels to get long and short using supply and demand structure in the market. Okay, so these catalysts I'm about to show you, whether we're talking about earnings, whether we're talking about Jerome getting on the mic, whether we're talking about we understand the elections are coming up. These levels are already here for us. So in the event we get a big pullback into the election, regardless who is selected, we will be ready to take action. And I want to be able to show you guys that, okay? So again, please hit that like button, come and visit us, come hang out with us and see why we have such a great win rate. Okay? It's awesome. And we're both doing very, very well. When I say the both of us, I'm talking about Melissa and I here in the room. All right. Let's go ahead and move on. We are waiting for this week. All right. Again, the 27th is right now. Futures open here Central Time, where I live in Florida. Open up at 5 o'clock, and we'll be discussing this all the way until the end of this week, which is the 1st of November. And again, I just can't believe that we're this close to elections. We have a huge lineup for earnings this week. And I mean, there's a lot going on, guys. You talking about we could see some volatility. I can't wait. This is my favorite. Um, yeah, it's just absolutely amazing. Okay. But these are the days we're covering. So again, think about it from a monthly standpoint. Your monthly candles will be closing out this week. Very important. Let's go ahead and take a look here again. So the 28th, which is Monday, we have nothing scheduled. Okay. On the 29th, we have consumer confidence and job openings. Both can definitely create a little bit of volatility in the market. Just understand what time. These are Eastern times. So, again, we're identifying those levels. We already know where we want to get long and short. Again, these are just catalysts that push price there. Wednesday, October the 30th, ADP employment, GDP. All right, so some good things coming out on Wednesday as well. Not as boring as the last Monday through Wednesdays on the last several weeks. We're kind of hitting the road running here, starting out this week. Then we have advanced wholesale inventories pinning home sales. And then on Thursday, we get in here with PCE year over year initial jobless claims, U.S. employment cost index, and Chicago PMI. And then Friday, November the 1st, happy November. It's my favorite month. It's my birthday month. Can't wait, right, to see that big number. If you know that big number, then shh, don't tell anybody. U.S. employment report, S&P final U.S. manufacturing PMI, and auto sales, ISM manufacturing. So what I noticed right away is less Fed heads, less, talking heads this week and more action, baby. So that's what I'm excited about. Next, we're going to get into over here on Twitter. On X, I like to use Earning Whispers at eWhispers. They've been very reliable for many, many years, and I use them for this. I don't get paid for any endorsements or anything like that. I just love coming over here, and I've seen there's many, many sites and people out there that have kind of like the same looking calendar, but these guys are the OGs. This is where it's at, and so I can rely on them. But as a disclaimer, you always want to check your broker and make sure that the times are represented, are accurate, and so forth. If you have any questions, always reach out to your broker. Over here on earnings, there's a lot of names this week. Like I said, this is like the Grand Palooza. Like, I mean, elections are coming up, these serious names are coming out. I'm super excited, and I hope you guys are pumped too. I love actually making trades into earnings, not on every single name, but I pick my names, I identify supply and demand, and then we trade what we feel is a great risk to reward. If you don't know anything about supply and demand or the way that we think, it's really easy to get yourself into an amazing setup going into earnings. Most retail traders, that's you and I, are taught to sit on our hands. But let me tell you something, if you understand your allocation and you're okay with it, a trade is a trade. I don't care if you take it during the day. If you end up losing money, you lose money. If you take a trade into earnings, you could do the same. You could lose money. And a lot of traders will say, well, I don't know what's going to happen. Listen to me. You don't know what's ever going to happen when you take a trade. And that's the thing that you got to let go of. We trade our process, we have levels, trade the levels. The two things that are going to happen is either you don't make profits or you do make profits. One of the two. Okay. This week, starting off pretty strong here on Tuesday, we have Sophie. You can see that SOFI. We have AMD, Google, PayPal, Snap, McDonald's, Chipotle, Pfizer. I got Pfizer long term. We have leaps on that, but I also have some protection. I'll be taking a look at that protection before so I will update you guys tomorrow. I also hold shares in this company that was trimmed on Friday after an explosive move. And so I have half of what I had on, and I shared that with you guys in the room. Visa. I don't really trade Visa all that much, but hey, listen, a lot of people do. Reddit. Love to see what's going to happen there. Crocs. Don't judge a man unless you walked in their shoes. Well, unless they wear Crocs. Corvo, Cuervo, QRVO, not to be confused with tequila, not the same thing. Moving over here on Wednesday, I also hold a trade in Microsoft. Amazing move from our demand, but it just wasn't enough at this moment. And so I may turn this trade into a debit spread going into earnings. We'll see. I will update everybody tomorrow or Tuesday. Again, I have until Wednesday afternoon to make up my decision. And really, Microsoft has up until Wednesday morning to really like show us what it can do. LLY, right? Love to see what's going to happen here. Caterpillar, Meta, Humana, Coinbase, all of these. Robinhood been kicking butt lately. Can't wait to see what they have to do or what they say. Etsy, Riot, Roku, Starbucks, Carvana. I mean, we're just packed here. And then on Thursday, some bigger names. Amazon, Apple, Intel, Uber. Love to see what's going on here, especially with like Tesla and everything. So let's see what happens here. Uber is definitely of interest. I may trade this into earnings. And then as we move down further, I don't really see anything else that I'm very attracted to. Maybe cruise lines, see how they're doing. And then over here on Wayfair. All right. Let's go ahead and move on. Next thing we're going to be looking at is SPY, the bigger picture. I love to use the quarterly, and if you guys have not heard me say this before, this chart right here, if you've been watching me, whether it was at the Money Show in Orlando, or if it was the Money Show in earlier this year in Las Vegas, or hey, listen, I'm supposed to be at the Money Show talking with John Carter coming December. I believe it's December the 2nd or the 6th. We will be down in Sarasota, Florida. So if you guys want to hear more about supply and demand, get down there. I can't wait to meet you guys and see you. But the bigger picture, guys, swing trading never changes. But retail traders will tell you, oh, it's different conditions and all this type of stuff. But I promise you, it's the same thing. You just have to be patient. And if you're not a patient person, or you're not looking at the bigger picture, then you're really not aligning your thought process with the bigger money. On this, every candle represents 1 quarter. Okay, very important to know. Everything that I teach is fractal, meaning it's if it's on a 5 minute, we're looking for the same patterns, the same recognition, the same candle structure on a higher time frame, and that's what you do. The only thing that changes is your patience. Okay, so on this type of stuff, everything that I'm teaching you is about the close of the quarter candle. And one thing that I love about TradingView, this is the platform that we're looking at here, it allows you to know exactly how many months and days or hours that you have until this candle closes. So right now, your patience has to remain for the next 2 months and 5 days. Okay. These are really simple notes. We follow them. They've worked all year long. You guys can see I've been using these notes the whole year, and I'm updating you. A lower high this past week as the market sets up for a big earnings week. Now, when I say a lower high, I meant on the weekly. The quarter goes inside if it falls under 574. This 574 level is a line in the sand, if you will, for this week. As long as we stay above there, things look great as a continuation quarterly candle. If we start to drop below 574, then that just means we're dropping below the body of last quarter. And then we start to go inside. See, when things go inside, and I understand, like, say we go inside on Tuesday, right? We still have 2 months and so many days left. So I understand it can go back above 574, but once we go below there, it is in the process of potentially turning into an inside candle. Okay. So this is why we're using that level for this week. So far, though, the quarter goes inside under 574, but the support and the targets remain the same. We are bullish above 574, caution below that level of 574. And you guys could see here if we go back to last week's notes, next target was 590 to 600. We're going to keep those. Support level, when I say support, bigger support, 550 to 515. And then your close support going into this week is going to be that 568, and that line in the sand is 574 for this week. The next chart that I want to take a look at, same thing, it's going to be on the quarterly candles. You guessed it, it's QQQ. And you'll hear about this a little bit later when I get into the futures. I believe that, this week a lot of weight is put on the Qs. I think we'll get a lot of direction, right, because of earnings and so forth. These are my notes for this week, and then I'll show you some stuff on the chart. A higher high this past week, that's a great thing. And price did close above the proximal level that I told you about last week. We had to wait until the week closed out. We closed above it. Exactly what I or the bulls were looking for. It's a great start and finish to this past week, but still we are still in a supply zone. Okay? Please know that as price sets up into a very busy earnings week. We have a very high probability because we closed over 88.7% of this year's high. We have a high probability we are going to see a new all-time high very soon. Timing is the variable, okay? And that level again is that 493.71, okay? So that level is where we need to sustain and keep price above there. Now we're only about $2 above that. That's not a lot of flexibility, but that will serve as your line in the sand once again for this week, okay? Support and targets remain the same. You guys can see that right up here on this 1020 annotation I have. Just take that into consideration. 485 by 476 is close support. Your target remains 505. Okay. Let's go ahead and move on into this week on the dollar. DXY. And in the room, guys, you have the QQQ chart underneath from Thinkorswim on the weekly to show you that supply zone and how we held above that 493.71. So please go there and take a look at that. Far as these charts are concerned, I want to bring your attention to the weekly. This is important. You guys can see that price did close above the 618 and we are above the cloud. If this were Tesla, if this were Roku, it doesn't matter. This would be a nice momentum trade that came into demand, and we expect prices to bounce in demand, and that's exactly what happened. This is 1, 2, 3, 4 weeks up. I would expect it to die out a little bit, but just know that price can range today, or sorry, this week on the dollar. Okay, from possible move to 106.4 as long as this level down here holds, which is about 103.36. Okay, so 103.36 and can move all the way up here towards the supply zone. Right now, things look pretty bullish in the dollar. Now, listen, normally I would come in here and tell you if the dollar's moving up, that most likely the market's going to move down. Anytime we come into earnings season, it's important to understand for me, if you guys have ever seen the movie, right? Wolf on Wall Street, and they talk about, hey, it's a fugazi, it's a fugazi. That's what I think when it comes into earnings season. So I'm not going to totally ignore the fact that the dollar has moved up and is above the 618 and it's doing its thing. But I am going to say don't put too much emphasis on what you typically would do because at the end of the day, a lot of investors are switching more to a bullish neutral stance, showing off of the fear and greed, which I'll show you here in a second. And they got to wait for information. So even though I'm a technical trader, a lot of traders out there, fundamental traders, and they're waiting to hear what, kind of forward looking earnings we have and so forth. Okay. So just understand that it is room for caution, but because we're coming into earnings, I do believe those will speak for themselves. The next thing is the 10-year treasury on the TNX, and this thing also, The momentum has changed. We went from red to white candles. We are moving up into an inside and down formation, but it is important to know that momentum did change and, price has definitely gone up. My expected range now going into this week has changed a little bit, 4.1 to 4.67. The higher we go, the more fear that kind of comes into the market. But again, for me, it's earnings season, so I'm trying not to put too much emphasis on here. But I do want to tell you, in most circumstances, I would say there is caution coming into this week. The skew, very important as well. Let's go ahead and take a look at the skew. We did come down quite a bit, so that's a great thing. So that means that, a little bit less fear, but it also makes sense is like less fear doesn't mean like, hey, let's just step on the gas. It means, in my opinion, a lot of people again are waiting on earnings, and that's kind of the theme for this week. Big names, big risk kind of comes off. They become neutral, and they're waiting for information. Okay, so we are at 148. I personally would love to see it come back down here to the 135, 133 range, where we would set up calls for 5 to 10 days out on the SPY. Not meaning we don't buy calls in this area, but I really love this area as it's worked very well over the last year and some change. But just know this is definitely an area where we can bounce in the market. And I'm going to tell you why I think we could see a bounce tonight on the open. All right. So again, 148.91, and that leads me to my next um, chart, which is going to be the fear and greed index. So the fear and greed index went from a 75 to a 59 in the last week as investors back off and allow a neutral sentiment to creep into their overall thoughts coming into earnings. And that makes sense to me. I think we start to back up and maybe become neutral. Yeah, so it just makes sense to be neutral going into such a big earning catalyst. So again, backed off. That's a good thing. And our next charts we're going to take a look at are going to be the futures. So let's go ahead and minimize this right here. And this is going to push us into the ES chart. I am using the ESZ24. And this has worked out very, very well. These are the same levels I've actually given you over the last 4 weeks. We had some fib extensions, we had immediate support, we have a bull channel, and we have a demand zone. I want to make sure as we get closer into earnings that you understand these levels. If we get some kind of surprise to the downside, depending on, or first of all, it's not about who gets elected. I think they're going to use the catalyst, no matter who gets elected, to cause volatility. All right. That volatility could lead us into a big pullback right into this demand zone. Okay. Know that this demand zone exists. It's around 54.52 on this chart by 51.51. It's very wide. All right. And currently, that is a good, if we look at the price here, 58.42. 54, that's about 400 points. 400 points is equal to, in the ES futures, 400 points is equal to $40 in the SPY. So you have to think to yourself, like if the SPY were to drop 40 bucks going into earnings, a lot of people would be scared, and no matter who's elected would blame that on that. But the real thing that I want you to be thinking about is that they're setting us up and sending price into demand, where most retail traders will most likely get super scared, get out of their trades, lose money, and then decide to buy puts right into demand. This is where I would be looking at, me personally, I'm not telling you to do it, where I would be lining myself up to get long with the bigger money. For right now, immediate support is holding. Right under this immediate support, we have what's called the bull channel. We teach about that. It's Fibonacci. It's trendy Fibonacci, and I like to teach it in the room, and it works very, very well. Another thing that I want to point out is that we have the 9 EMA cloud that's holding here. As long as prices hold the support, things look good on the weekly. We did hit the fib extension perfectly. We pulled back as expected, and we pulled back into immediate support. I told you I would tell you why I think we're coming into a bounce, and the reason why is because we closed right here into immediate support, and you can see that it did bounce. We'll see if we sustain that on tonight's open. The next chart, we're just going to click this arrow right here, and that's going to bring us to our daily. Notice when I do that, I have a video here in the room, guys, to help you set this up. This is the best way to chart, in my opinion. This is not a flexible grid. This is a way that we can go and look at some of the most important things. Okay. So right here, The only thing that I did differently here was I changed our resistance. It was here at this trendy edge last week, and you can see that it worked very well. Okay, this was resistance, and you can see we were had resistance right there at that level. We came into our buy trigger. We came into this inside and up formation, and things worked out very well for a nice little pop. Now, I was gone during this, but I took advantage of it as I trimmed out Tesla. I also sold Tesla calls, and so did Melissa. She had a different strike than me. And I sold mine for a good close to 400%, and she also got 400%. Those were huge winners, and these weren't like 30-cent options that went to, $3. These were options that went from 2.5, $3 into 12, 14, and they went way higher than that. But I think we did very, very well, guys. And again, I'm gonna show you that Tesla chart here soon. These are your these are your triggers set up for this week. When price gets there, we practice some techniques that we teach on how to use these triggers. So please, again, check us out if you want. Over here on the 4 hour, we're going to keep this the same. I did bring in a supply zone. You can see price hit supply, it pulled back, and we closed here in the 4 hour inside and up. Important to understand that this has worked over and over, but this is not a new zone. But since it keeps coming into here during this earnings season, I do think we could see a pop tonight on tonight's open. Okay. Next thing we're going to look at is not this chart, just right here. We're going to look at the NASDAQ. And after that, we'll look at Bitcoin. And then again, we will look at Tesla after that. Here's the NASDAQ. We're going to go into the weekly chart. This thing also providing you with the best levels around has worked very, very well. We understand what happens in supply. We teach that. We know to back off on our longs, but also trim on our longs when we hit these zones. Notice this past week, we did pull into the immediate support, that same level that's been sitting there for you to take your long. We did make a new higher high within this zone. That's a positive. I like that. Um, and it also, this is pretty crazy. This is an inside week. So the chances of it falling right within this body were pretty slim, but it did that on the NASDAQ. This week, look for either an inside and up or an inside and down. One of those two are going to happen. I would be shocked. Maybe I wouldn't be shocked, but the probability of price closing within this body again is pretty slim. But if we do that, then it's just going to set up for another doji type candle, indecision candle as we get closer to the elections. Okay. Next thing, again, everything's looking good on this. We came into the cloud for support. We came into the immediate support. Down here is demand. I could come down a little bit closer. We'll look at this into elections. This is an inside and up formation. Just know that. And so we could pull this demand zone a little bit lower. Just know that this is your inside candle. Okay. Let's go into the next chart, which is your daily. On this guy right here, I did not change any levels. You can see the resistance has held very well. We need to get up and over that 20,622 to really get things going. If earnings go really well this week, I do believe that we can move up here towards 21,131. And our buy triggers or trigger longs still remain the same. But again, these are not blind triggers. We teach a very specific process. Let's go ahead and move over here. Again, nothing to do here. Same levels I gave you over the last couple weeks. One thing I do want to show you is this demand zone was breached and it broke down. And basically, I don't want to be a D for a T. We basically came into this demand zone. It worked. We pushed up into supply, which we knew we would see a rejection. It rejected and just kind of stalling out here in between two opposing zones. Okay. So again, I'm very neutral bullish, and I know that sounds funny, but the reason why I am neutral bullish, so I'm neutral bullish this week, and specifically here on the NASDAQ, bullish because price established a base above the supply proximal line on the QQQ. Okay, so on the QQQ, and actually I want to show you that really quick if that's okay. Let me pull that back up. All right, and we're gonna type in QQQ here. And I was talking about this a little bit earlier. We want to go to the weekly chart. All right, so to see how we stayed above the proximal line, this is the same level that I gave you guys last week. This is a very bullish level. If we can stay above here, we actually fall into that 95% that we are going to see an all-time high. So that means up and over this. Timing is the variable. And I do recall several months ago, we had the same situation with the ES, and we actually pulled back pretty deep. And then it took about a week or two, and then we got right back over it. All right, if it even took that long. But this is a very important level. This is a good sign that we stayed above it, but we are still, as a disclaimer, we're still in supply. And as long as we're in supply, they can kick you out of there if earnings don't go well or we get some kind of left field catalyst about the elections. We could see, an extreme pullback. So just know that, again, a lot of focus this week on that level for me at 493.71. Okay. Next thing that I want to be looking at is what I promised, and that's just a quick look at Tesla. So right here, this is Tesla, and we had an amazing trades on Tesla. We really have. Not only have I been buying equity almost perfectly every single time, and we've been trimming that equity. Our last entry on Tesla was before their earnings, I think at 218. We ended up trimming at 260, and then I trimmed some on Friday at 268.79. So we're doing really, really well from an equity standpoint. On the option side, again, Mel hitting that 400% and myself as well. These were nice option setups going into earnings. I want to make sure everybody knows once again, we use earnings as a catalyst, but we're still executing at the levels that I presented. And I presented these levels before price got there. We knew that we were in an area of support. We look to take that trade. By the way, this support level has turned into a demand zone. Okay. So this is your demand zone. We also have, some imbalance there. But what I like about this and why I think we can continue to move up is because price actually stayed there for quite some time. It's not like this was an imbalance that just kind of happened out of nowhere. This levels, we came into demand earlier in the year here, but then we just stayed here for a very long time, and then we finally broke out. Now, there is caution right here. This is a lot like that proximal line we're talking about on the Qs. My target right now is 275 to 280. You have to establish price above this 275 in order for me to feel better, but know that you're still in supply. That range is 275 to 316. This is where I expect prices to range in. And the next thing that I want to do is I'm going to forecast that we can hit my target. So what I'm going to do is go from the bottom of this level into the area where I believe we can hit. And then I want to find the 23.6 and the 38.2. Okay. So once we establish that target, then these areas, and we're going to come down just a little bit, are going to be your new support. This is no longer support. This is demand down there. So it's going to look like this. And this is your blueprint going into 2024. If something weird were to happen, elections, and this were to happen, this is where I want to be buying. Okay, if we get that opportunity. So I will add again into my equity. We've done really well. I've trimmed. Still have a piece on. Looking to see if we can get up here. But if not, then I add and start adding down there. If you want a crazy hedge, just in case, we all know, Tesla, Musk, whatever. If any, for some reason, again, I'm not political, but if you're thinking like the affiliation goes against him, like he spoke about in the interview, price could drop through demand and come all the way back here. So I like the hedge of a 150. It's super inexpensive. 150 puts 100 days out. Just think about it. Again, I'm not a financial advisor, but for my type of trading, this is a nice hedge for me. In case something weird were to happen. But I do think that we're building up for an explosive move here. So either way. I really, really appreciate you guys. Don't forget to hit that like, and we'll talk to you soon. Can't wait to trade with you in the morning. Have an amazing day. See you tomorrow.